Alright guys, it's your boy Shades and Trades here. Let's go over technical analysis for beginners 2024. I usually like to make these kinds of videos every year. Every year, everyone does it. Technical analysis for beginners. You know, get the newbies to jump into trading and get those views. That's just how it is. That's the name of the game. But the first thing I want to talk about here is starting technical analysis from a top-down approach. What that means is, hopefully you pull up a monthly chart here on silver. I also have a weekly and a daily chart. You'll notice there's no lower time frame charts here. I trade the higher time frames because they're more consistent. And I start with the monthly and work my way down to the weekly. Let's remove this rectangle. Let's make sure we got as clean of a chart as possible, just for the sake of the technical analysis we're going to do here. So the first thing I do is I start with the monthly. I look at the price action. Where are we trending? Down, up? Are we going sideways? What kind of market is silver experiencing? I don't care what the other markets are doing. I care what this stock specifically, what kind of movement is it exhibiting as it fluctuates over the course of years. And you'll notice if we pull back, this thing loves to go sideways. It loves to go sideways. That's the first thing I've noticed. So that can be marked here with, this is what I like to do, a white line. And you'll notice right here, sideways action. Here has a huge run up, trends downward, more sideways action. Has a huge run up, more sideways action. And just like that, we have recognized a pattern in this stock that likes to rinse and repeat, and has done so since 2007, because we're looking at not just at the recent price movement, but we're going historical here. We're going all the way back to 2007. We really got to look at this stock and see how it loves to move on those higher time frames. And this thing loves going sideways. It's very consistent in that sense. Not the most volatile, because it only loves to move up like 50 cents at a time, $1 at a time, compared to something like Bitcoin. Bitcoin mining stocks, to be more specific, those things can move. I mean, look at this insane move. Look at this monthly candle. It can move 100% in one monthly candle, compared to silver, which only moves like $1 or $2. So just like that, we learned two things. We learned how volatile the stock is within a monthly candle. And we also know, because of that, we know that it's not very volatile. Number two, it loves to go sideways. It loves to range. What does that mean? We know now, okay, this stock loves to range on the monthly. At this point, buy low, sell high. It's not that complex. Too many people overcomplicate it. If a stock is ranging, and let's remove all these vertical lines and let's just keep these vertical lines here. So we got resistance up here, and we used a red line for that, and we use a green line to mark support. So we got support down here at 1920, resistance at 2311. It's been going sideways here since 2020. 3 years going on to 4 years. It's just been, the market values silver between $19, $20, and $23. Okay, so now we know what the market tends to value silver at. We know it's not the most volatile, and we know it loves to trade sideways. And now, what does that mean? Our strategy should be pretty simple, not complex. We buy low. We buy when it comes down here to the bottom of this range. We buy somewhere around here. We start accumulating under 2050 is what I would do, but at its highest 21 is what I like to do, and I'll show you why in a second. But I like to use a yellow line to mark my accumulation zone. So what is an accumulation zone? It's if a stock is trading sideways, obviously you want to buy the bottom of the range, or as close as possible, right? Because we're buying low, selling high. So the accumulation line marks a price point where we are looking to buy the stock and accumulate it, even if it goes down lower, because we're confident that based on our technical analysis, this ranging stock is going to come back down. Sure, maybe it'll come down as low as 1920, But eventually we know it will come back up because it's just been that consistent. Again, it's been consistent like this for 3 years going on to 4. And that gives us confidence because, again, we're looking at the higher time frame, which tends to be a lot more consistent compared to the lower time frames, which is why you don't see me using lower time frames. I used to do that, but they're just not consistent enough. You can't really, they're not reliable. You can't really trust the lower time frames. So I stick to monthly, weekly, and daily. So this line, this yellow line, is the accumulation zone. Anytime it goes under 2050, I start to accumulate and swing trade it for the long term. Accumulation price point, that's what I mark it as. And believe it or not, I do this for every stock. Let's switch over real quick to Riot. And you'll notice I have a line here, a green line. I should probably switch it to yellow. But this yellow line, it's going to be yellow now. That's my accumulation line. Anytime it goes under $10, you'll notice it can come down as low as $3. But guess what? It always recovers. Anytime it goes under $10, it always recovers. Sometimes as far as $60, sometimes just as far as $20. But that's important to know. It's important to have that accumulation line so you know if it's under this price point, start accumulating, because in the next bull market, it's going to go up 100%, 200 or more. So that's the significance of the accumulation line. And it's going to be different, obviously, for every single stock. I mean, Shopify, I think the accumulation line for Shopify is, I think it's 30, right? Yeah, it's going to be under 40. And I come up with that number based on how low the stock price went during a bear market before recovering. So this thing went as low as what? $26.54. And then it made a huge recovery. So the next cycle, the next time we go into a bear market, guess what I'm going to be doing? I'm going to be looking to accumulate this stock under $40 because I know, hey, this thing has a history of going sideways, because that's what it's doing here. It's just going sideways now. Since 2020, it's been going sideways here between 25 and 150. It's on its way up there if we continue this bull run. But that doesn't matter. We don't care how far it goes up. We want to buy it as cheap as possible under that accumulation line. So that's the importance of the accumulation line. It can be applied to anything. That's why I'm showing you many, many examples. And you find it by looking at the stock and seeing, okay, where was the previous bear market? This is the bear market right here. It actually got steeper here. Okay. It went as low as 1634, recovered as high as 23. Buying under 20 seems like a good deal. That's just my opinion, though. You want to trade stocks that A, are trading sideways on the monthly, B, trending upward on the monthly, because it's hard to hold a bag on something that comes back up for you. NVIDIA is a perfect example of a stock that just, you could have bought the top every single time. These are tops, and these tops are indicated by white arrows. You could have bought the top every single time. Still came back up for you because this thing just keeps going higher and higher. And that is the power of not only the monthly chart and looking at things from the big point of view, but it also helps with not trading stocks like this. Look at Mullen, the exact opposite. And all I had to do was look at the monthly chart, and just from that alone, I figured, yeah, I'm not touching that. It's that simple. Okay, back to silver. So now we know how to identify our accumulation zone, our accumulation line, price point, whatever you want to call it. We know that anytime it goes under 2050, it's a steal. Load up, accumulate for that next big swing to 23. We also know we have support here at 1924, and that we know because the stock has bounced off of that level. Let me remove these arrows because I can't see. Okay, we know it's bounced off of that level, or this demand zone. We can call it a demand zone. That's what some people like to call it. We've bounced off of this level, this demand zone, multiple times. Anytime it comes under $21, anytime it goes under 21, it comes back up to 23. Whether you're using a horizontal support line or a demand zone, It's the same story. This stock is a deal under 21. Buy low, sell high. Demand zones are areas where we expect buyers to step in and push up the price of the stock. That's why the accumulation price point is there to let us know, hey, under this level, people start buying, they start accumulating for that next run up. We know that's support because that's where buyers step up and cause the stock to bounce and have these big green candles, monthly candles, because buyers step in. Same thing, the demand zone, if you like to use demand and supply, same thing. Demand is indicated by a green rectangle, and it marks a zone where, surprise, surprise, because this is a ranging stock, it marks a zone, it marks the bottom half of this trading range where you want to buy, because the top half is obviously where we would expect selling pressure. This is where we expect selling pressure because that much is obvious by looking at the red candles. Look at these red candles at the top. Look at these red candles going into $23. We always get selling pressure up there. And we know that because of those red candles. So that's your supply zone or resistance. Again, probably like the perfect stock to do technical analysis on, at least for learning. Okay, I've talked a lot. Let me get some water. Okay, so now we know how to identify stocks to trade on the monthly, which ones not to trade if they're just trending downward. And now we have a strategy for sideways action. If on the monthly a stock is going sideways and we see this price action, we know the strategy is to buy at the bottom of the range under the accumulation price point. And we can do that on any chart. Let's look at Riot. Look at Riot. Holy crap, is it just me or is it just going sideways here since 2020? I don't know why that's the case. I guess we've been going sideways on the market for years now, neither bearish or bullish. But you'll notice if we grab a horizontal line, let's grab a green line. We have support down here at 347, and we have resistance because this is where buyers step up. And that much is indicated by the green candles. And we have resistance up here at around 1864. Because we get rejected there. That's usually where we get rejected and pushed down by sellers. By profit takers, because that's going to happen, right? People are going to buy, people are going to sell. So we're going sideways on this stock too, between 348 and 1864. I know that's a pretty wide range, but that's because Bitcoin mining stocks are very volatile like Bitcoin itself. So you can see a huge difference already between a Bitcoin miner being much more volatile, even though it's in the similar trading range since 2020 like silver. But this one is just technically a lot more dangerous to trade for beginners because if you don't know what you're doing and you buy the top, oh boy, are you going to have to hold down all the way to $3 if it comes down that low. But as you guys well know, my accumulation zone is $10 because anytime it goes under 10, guess what happens? It comes back up. Anytime it's under 10, it comes back up. So being able to identify what to buy and when to buy it is probably the most important thing. Because even if you know, hey, I should buy Riot, if you don't know when to buy it, you might end up just throwing money at it at the top thinking it's going to go to $55, which was the high back then. But that's usually, I'm not trying to insult people, but it's usually stupid people who fall for that. They buy the top thinking, oh, it's going to go to 55, and yeah, they end up holding a bag as it comes back down under the accumulation price point here, which I have marked as 10. And I've made many videos telling you guys, buy Riot under $10, buy Riot under $10. I'm not even kidding you. I'm going to pull it up right now so you can see. The reason I kept making videos telling you to buy Riot under $10 is because I knew that's the accumulation zone. That's my accumulation price point, whatever you want to call it. Accumulation price point. Anytime that's under $10, it's a steal. Let me pull it up here so you guys don't think I'm just messing. Yeah, Riot, I don't mess around. Bought Riot at $10. Everyone loaded 5,000 shares on that $10 break. High conviction swing. And I made a whole video on it. Like millionaire challenge, $50,000, 5,000 shares, Riot stock. And I made that video, back in 10/9, October, I believe. Yeah, October 9, 2023, and look where we are now. We're I already sold for a 60% gain. So yeah, because it's getting rejected up here, which we would expect, right? We would expect selling pressure up here because this is where our horizontal resistance line is. This is where we would expect supply. We would expect people to take profits. So that's why I took profits. And we'll go more into profit taking. But right now, we're just focusing on volatility, being able to recognize opportunities in a bear market, being able to recognize those accumulation price points, and also being able to recognize, like, hey, this is a little more dangerous to trade because of just how volatile it is. I mean, $3 to $20. Compare that to silver, which goes between what, 19 and 23. Ooh, scary. That's not even, that's like a $3, $4 fluctuation compared to that of Riot. So again, okay, hopefully now you know how to recognize the accumulation price point. It's important to have that line because in a bear market, stocks are going to get real cheap. And when it goes under that price point, that is when we want to load up and you'll have the conviction. But I'm trading a Bitcoin miner, so I'm not really trading a traditional stock, so to speak. I'm not trading. I was telling a guy in the Discord that I was talking to, shout out to that guy, cool guy. But silver, it's a metal. Silver is a metal. Think about that for a second. It's not a company. It doesn't dilute. You know, when's the last time you heard of metal diluting? You know, go grab some silver if you have some silver on hand, and ask it. Hey, put it on the desk and see if it dilutes you. Like, it's a metal. It doesn't dilute. It doesn't reverse split. There's no earnings to worry about. There's just a lot of things you don't have to worry about because it's a metal. And I know some of you probably, your minds you just went bananas right now because you're like, oh my God, he's right. You don't have to worry about none of that stuff. You don't have to worry about reverse splits or CEOs screwing you over. It's a metal. It's not a CEO. It's not a living organism. It's a literal metal. Like, if you have a silver or any piece of metal near you, just look at it and ask it, hey, what's up? Like, it's not going to do anything because it's not living. Okay, but jokes aside, this is why I love trading silver and Bitcoin miners, because again, they're not like a traditional company. They go up or down with Bitcoin or silver. I don't know what causes silver to go up and down, but hey, I really don't know why silver is. I guess the market just prices silver at 20 to 24, and guess what? I'm going to take advantage and buy at 20 and sell it when it goes up. Scale out. Anyways, now let's move on and talk about labeling. Label your horizontal lines. Always label them. This is what I like to do. So we have our accumulation price point. This is horizontal resistance. So let's label that as such. Horizontal resistance. And at the bottom, horizontal support. Horizontal, you got to call it horizontal support and resistance because we're going to touch on the next kind of support and resistance, which is trendline support and resistance. So I got my trendline tool, which I use not yellow, blue. I use blue for trend lines. And the first thing I'm going to do is look for the bottom, the most recent bottom, and then just draw a line to the next higher high or higher low in this case. And then we'll go to the nearest high. You can go as far back as here and draw another trend line that touches the top of these, the top of the range in this case. That touches the lower highs. In this case, again, it's going to be different depending on the stock. And there you go. We've identified not only the current trend, which obviously it's sideways, so surprise, surprise, we're inside a wedge. And two, we've identified we're inside a wedge and we're nearing the end of it. It's a monthly chart, so it's going to be a while for it to play out. But we do know that we are nearing the end of a triangle, which means it could either break out or break down. But the important thing is we've identified the trend. It is absolutely going sideways. Yes, we know that. And we know it's inside a triangle, which means we have to be cautious because it could either break down and go lower like it did here, or it could break out and go higher. Who knows what the market is going to value silver at? But we know to exercise caution because of the pattern that it's in. It's neither bullish or bearish. It's kind of like, oh, who knows where it's going to go type of pattern. But there you go. We've identified the trend. We've identified the chart pattern. Now the next step is, and if you really want to, I don't label it, but you can label it and just say, wedge. And you can label these, supply. I should be doing this more. I don't do it anymore because I can just tell by looking at it and know what's going on. But yeah, so there you go. Just for you guys, just to give you the visual. So now we know A, the trend, B, what pattern it's in. We know where supply and demand is, where horizontal support and resistance is. We know the accumulation price point. We know the volatility. We know the kind of patterns it loves to exhibit. Now we know that we have trend line support here along this trend line down here at the bottom. This is trend line support. We know this is trend line resistance because again, it's inside this wedge. So as long as it's going to continue to follow that pattern, we would expect buyers to step in at the bottom here at this trend line support, and we would expect selling pressure at trend line resistance, which it's done so twice. So we would expect buyers to step in again unless the pattern is going to break down now. But we won't know until probably Thursday when the Fed speaks, or the Fed data comes out, my bad. So this is trendline support, this is trendline resistance. All right, now the next step is to go to view all studies, and I want you to add 4 exponential moving averages because these are used as support. And I want you to add a 200, a 20, a 50. I'm sure a lot of you are like, yeah, we already know this one. And a 100. And just use whatever colors you like. I'm just going to use, whatever. Doesn't really matter. Whatever colors you prefer. And there you go. Now we have exponential moving averages on the monthly chart. And people use these as support and resistance. And you'll notice if we go back in time, again, we got to do our horizontal zoom out here. We got to zoom out here and we have to look to see what exponential moving average acts as support or resistance. That's important to know. Where do other traders look to buy the stock if they do buy the stock at a certain exponential moving averages? Because sometimes exponential moving averages aren't respected by traders, and so they don't really mean anything. For example, the 20 EMA is absolutely useless. It's not really used as support or resistance. It just goes through the price action. So we can remove that. We know already, okay, that's not really useful for us. Well, we do notice something interesting, right? You guys notice something interesting? The yellow line is worthless. That's one thing because it's just going through the price action. If an EMA is just going through the price action like this, it's useless because it's not being respected as a level. It's not bouncing or causing the price to dump. But you'll notice the 100. The 200 doesn't even exist. The 100, you'll notice something interesting. The price got rejected here at the 100 EMA. It touched the 100 EMA here again and got pushed down. Touched it again here, got pushed down. Touched it again here, had a nice green candle, bullish candle here where buyers stepped up. It tried, you can tell sellers tried to push it down here. It got pushed down here, here. Look at that. Is it just me or is this 100 EMA acting as resistance? Well, guess what? It is. And now we know, on this alone, we know that the 100 EMA is very reliable and it tends to act as both resistance as support, because if I hide all of my technical analysis and just keep the 100 EMA, you'll notice it just loves to act as resistance in a downtrend. In an uptrend or sideways action, it loves to act as support. Look at how many times it's bounced here. That doesn't mean it can't break down, but it loves to act as support or resistance depending on the trend. And that is useful for us because we can use that as a dynamic support that keeps moving with the price action, and we can use that as an opportunity to buy in at the 100 EMA. Anyone who bought in or shorted here at the EMA made money. Anyone who bought in here made money. Even if you bought here, it still came back up for you and you made money. Again, that's because we know silver is not that volatile, and it's very consistent in staying between 19 and 23. So that's why all of this technical analysis comes together to form a big picture. But yeah, Now, not every stock is going to be like this. Not every stock is going to respect the 100. For silver specifically, the 100 works. But for something like Riot, maybe the 100 EMA is absolutely useless. Or not. I mean, it just got rejected here by the 100. So maybe not. But let's look at the other ones for Riot. Let's see what Riot... It looks to me like... Yeah, there's really nothing reliable here. But the 100 and the 50... You'll notice the 50 here, the price got rejected right here, and then the 50 EMA rejected the price here and pushed it down big, and then it just trended downward for a long time. It got rejected perfectly right here. Look at that perfect rejection. Huge wick, and then just got pushed underneath that 50 EMA. So the 50 EMA, very reliable in a downtrend. In an uptrend, it's not very reliable. And look at this. In an uptrend, or even sideways action, it's not very reliable. It goes through the price action. So if an EMA goes through a price action, it's not very reliable. It shouldn't do that. It should get rejected like here. Look at that, just perfect rejection. This is pretty good rejection here as well. I mean, look at that big red candle. The moment it even went above that EMA, it immediately sold off. So that's that, yeah. So in this case, in Riot's case, the 100 EMA, not as reliable, but the 50, very reliable to use in a downtrend as an area to identify, as an area where we know, hey, at this 50 EMA, we're going to see profit taking more than likely. The 100 EMA acted as resistance here, so maybe the 100 EMA is also reliable. We don't know yet because we don't really have much information other than that one touch and rejection. So just based on this alone, we would assume, hey, this is probably going to act as resistance. So if Riot has a breakout, we would expect this EMA to act as resistance because it did so in the past. So there you go, guys. Two different stocks, each one respecting different EMAs. What stock is respected? What EMA is respected by which stock depends entirely on the traders. If enough traders think the 100 EMA is a great take profit point, we're going to see rejection at that 100 EMA every single time. AITX is a perfect example of this. Anytime, let me switch to the daily because it's much more clear on the daily. Where's the 200? Anytime we go above the 200, rejection. Huge. We went up above it, gapped up above that 200. Guess how long it stayed up there? Not very long. Immediately, look at that huge downtrend that started. It's almost like the price punished you. It punished you for even daring to go up above the 200. For even gapping up above it, like how dare you? And it just hanged. Got rejected here. Here it got rejected. I mean, got close. It didn't get close, but I mean, close enough here. So what EMA a stock respects, again, it's going to differ. So don't always assume that just because one stock respects the 20, it's going to do so on all other stocks. And that's the point I'm trying to make. So with that out of the way, we use EMAs for identification of potential support and resistance as the market fluctuates. Okay, guys, now the final indicator that we're going to add in our final part, our final piece of the puzzle here for technical analysis is the MACD, which I use as a buy signal personally. And I use a MACD of 4, but it might be different depending on the stock. Because I change this number up depending on the stock, because every stock behaves differently. Every stock is different in terms of volatility as well. So we know silver is not that volatile, so actually using a 4 makes sense. The more volatile it is, the lower the number. But if it's too volatile, you want to use a higher number for consistency's sake. And I'll show you why right now, because we're looking at silver, something not too volatile, and Riot, which is very volatile. Hell, we'll look at it in video right now as well. But silver, we added the MACD down here. You'll notice the first thing you want to look at when you apply the MACD to the chart. Let's hide everything but the MACD just to keep it clean. Wait, where's my MACD? Oh, it's down here. Okay. Okay, you'll notice that every time it crosses over, we have a run-up, which is good. That's what you want. You want that kind of consistency. So it crosses over right here on this candle. No, on this candle. Damn, that's even better. Crosses over on this candle. It crosses over on this candle. Crosses over on, it crosses over on this candle as well. So what do you notice? Anytime it crosses over, we have a nice at least a month of green to follow. Sometimes two, sometimes about 2 months of green after that crossover. In this case, we had one green and one red profit taking, which no one should be surprised by that. But yeah, we just learned a lot just off of the MACD. We learned that it's very consistent in that when the MACD crosses over or crosses under, we get some downside or respective upside. So we have to respect that. If we see silver cross under, we know not to buy. We know to stay away because that means downside is coming. If we see a crossover happen on the monthly, we know it's time to load up because we're going to get probably about 2 green months. And we know that because we counted the candles. Here we got a crossover, 1, 2 green months. Crossover, 1, 2 green months. This is a cross under, and it took months, but we came down. It took a while, but we came down. That's why you don't want to buy when it crosses under. And here we crossed over, and we had this. We just had one red candle. It was green, came up as high as 22.46, but closed at 21.88. So even if you bought, you still would have made money regardless. Just not a lot compared to these two crossovers. So what we learned is, when it crosses over, buy in and expect minimum 1 month of profit because it's going to go up that 1 month. But there's also a possibility that it has a huge run up and goes up for 2 months or 3 months in a row. And that is always good to know because then you have an idea as to when to take profit. Because now we're going to get into profit taking after talking about the MACD. So the MACD is just a buy or sell signal. Or no, not a sell signal. So the MACD is just a buy signal, and it's also a signal when not to trade. So whenever you see this cross under, just don't touch it. Now let's look at NVIDIA. NVIDIA, you'll notice, same thing. It's kind of very reliable, isn't it? Let's look at the daily, because we just recently had a breakout. But you'll notice every time there's a crossover on NVIDIA on the daily chart, we get some upside. Here's the crossover, upside. Crossover, holy crap, huge upside and breakout. Crossover, mega upside. Crossover, more upside. Cross under, downside. So hopefully you're starting to see the pattern here and why I like to use the MACD for identifying when not to buy, because that's important. You don't want to be buying when it's crossing under and going to dump lower. You want to buy when it's crossing over and about to go to new highs in this case. At least that's what happened recently. So yeah, that's the power of the MACD. I use that for trading signals, really, for the Discord. We buy in. It's not always, it's not 100% accurate. It's not always going to work. But as I just showed you, it's pretty reliable the higher the time frame. So yeah, so that's the power of the MACD. And we learned a lot just off of that one indicator. Now let's look at silver again. So now that's it. That's pretty much it for technical analysis. Now we put everything together. And if you really want to, you can take notes. I don't take notes because I kind of just have done this for a long time. So I don't really have to take notes to remember everything. But I probably should because I might forget at some point. But the market fluctuates enough that it's like, should I really write down something that's probably going to change? It's probably going to change anyways as the market fluctuates. So you can take notes if you want to. There's a note section. You can just, blah, 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 blah. Leave a little note for yourself. Boom. Where is the note? There's the note. You can just leave a little note for yourself if you ever need a reminder of like, okay, how does this like to move? How does this like to behave? But I know this stock so well, like the back of my hand. I don't really need notes, but I highly recommend it if you're just getting started. Just keep notes like, okay, this thing loves to do this. It loves to behave this way. We should buy when this happens. And here's how many candles it loves to move up before profit taking happens, etc., etc. Okay, so now with all of this out of the way, yeah, we're just getting started, boys. Now let's talk about buying points, selling points, and dip targets and breakout targets. This is going to be the last section and probably the most time consuming. Okay, let's switch over to InVideo. And let's just remove all the technical analysis. Let's grab a nice, let's grab a nice white line. A nice white dashed, thick white line. Okay, so when do we sell? If we're doing technical analysis, when do we sell? We have all this information. We know we have resistance here. We have a wedge. Well, let's pretend like we didn't know that a breakout. So let's pretend we don't know that a breakout is coming. Let's go back in time and pretend like that breakout didn't happen. Okay, so let's just pretend it hasn't happened yet. We're sitting here. We see a wedge. We have resistance up here at 500-ish. We know that crossovers mean we're gonna skyrocket. And we know that a crossover is kind of overdue here. It's been a while. We've been trending downward a little bit. It's inside a wedge. We would expect a crossover and a run-up. And we would also need to know, when the hell do we sell? Yeah, we did our technical analysis. We know how the stock likes to behave and move. The next question now is, where do we take profits? So if we look at the MACD, this is why the MACD is useful. Anytime it crosses over, we have about, let's see, from here it went from 440 to 500. So it likes to make about a $60 move after a crossover, right? Let's look at this one. We got a crossover right here. No, right here. And it went from 483 to 501. So what? $17, $18? And we do this for every crossover. Let's look at the next crossover. How much did it move? It moved from 449 to, 500. Here it moved from, what, 448 to a high of 473. So it looks like it likes to move 18 to 30, not 18 to 30. It looks like after a MACD crossover, it likes to move $18 to $50 because it's very volatile. So obviously we're going to see big fluctuations like that. So it loves to move $18 to $50 after a crossover. Okay, so now we know that. So now we have an idea as to when to take profit. We should probably start taking profit anywhere after it's run up $18 to $30 or $50. And now that we know that, we're not going to be greedy. When we see it go up $18, you either take your first batch of profit, just close some of your position, but not all of it, and scale out as it goes higher. Or you can just take all your profit after it moves $18. So as you well know, this wedge did play out. It did break out. It did cross over on the MACD, and boom, you would have made money because you did your technical analysis. You looked at how much the price likes to move after a crossover. So you would have seen not only the wedge breakout happen, you would have seen the crossover. There was just so many things happening. There was so much pointing to upside. And you would have made, it went from a low of 496 to a high of 543. So you would have made your $18 per share. And if you scaled out, you would have made more, obviously, because you would have sold your first batch at $18, then at $30. So you would have sold at 518 and then at 530. And that you were able to pinpoint that because you did some pretty in-depth technical analysis. People don't go this far, I promise you. They usually just draw support and resistance and call it a day, which is fine. It does work, especially if it's within a trading range. Because if a stock is within a trading range, honestly, let me pull up silver. If a stock is within a trading range, once you get more experience, you don't really need to do all this technical analysis. You'll know just by looking at the chart. But you can just do this. Boom. It's within a range. I buy down here, sell up here. That's it. You don't need to do all the other crazy extensive technical analysis. But it's going to come with time. Being able to just look at a chart and do technical analysis without having to draw all the lines and shit, that's just going to come with time. Because I can look at this and know already, oh yeah, I know what I'm seeing within seconds. But it's going to come with experience, so just be patient. Eventually you'll get to that point where you can just look at something and you know already, like, what's next, if it's a good play or not, etc., etc. So just like that, we figured out when to sell. And you can do this with any stock. be it the monthly, the weekly, the daily, doesn't matter what time frame you're using, the technical analysis is the same, but I just start with the monthly and work my way down. But yeah, it works with any stock. I mean, silver, you can do the same thing. There's your MACD. When it crosses over, how much of a move does it like to make? Next time it happens, you buy in and you just sell, when it moves up $1 or two, and then rinse and repeat, as long as it's inside this, not triangle. Well, yeah, it is inside a triangle. As long as it's inside this trading range. And that's it. That's all you need for technical analysis. I just did technical analysis like fast. Like within seconds, I just told you, okay, it's within a trading range, and buy down here, sell up here. But if we're looking to trade a daily, we wait for the crossover and we sell after $1 or two. And rinse and repeat. Boom, within like 20 seconds, I just gave you technical analysis. But someone inexperienced would have to go through the painstaking process of adding notes and everything. Don't rush the process. Definitely take your time, is what I would say if you're a beginner trying to get into technical analysis. Take notes. Eventually, you will get to that point where everything's you just look at the chart and you know already where everything is. You know where demand is. You know where all these lines are without even having to think about it. All right, guys, as always, like, subscribe, and I will see you in the next video. If you want to join the free Discord, link in the description below. If you want to join the paid Discord, the link is also in the description below. And if you have any questions, feel free to ask in the comments. I will see you in the next one.